Hey, welcome back everyone. It is time for another red hot covered call video. Hey, look, I'm back behind the mic, feeling good, have made some great trades, and quite frankly, as we end 2018, I'm feeling optimistic because one, the stock market seems to have turned around, and I'll tell you what, it always feels good when we have green days. And look, I have no crystal ball, I make no predictions, but about 3 or 4 videos ago, I told you to hang in there because I believe Wall Street uses these times of volatility to run them up, to sell them off, to run them up again. Look, I have been in this game since well before the dot-com boom and crash, so I have pretty much seen it all. And I'll tell you what, it's about how Wall Street will bid them up to sell them off, to bid them up again. You know, it's really a mindset. You have to believe it. And if you're buying great S&P type company stocks, they always seem to come back. I invest in companies like Microsoft that have hit a high of 115 and in this recent sell-off have fallen as far as 103 and now it's back to 110, 111. Look, this is what Wall Street does. So you really have to wrap your arms around it emotionally and trade it like you're a Wall Street pro. Now with that said, we're going to continue the conversation about how you can trade covered calls and cash secure puts like a pro. So this is going to be part 2 of this series where, you know, like I've always said, this is not rocket science, right? You don't have to pay somebody $50 a month for some secret sauce PDF file. You just don't. What I've found since using covered calls and cash secure puts is that you really want a great set of stocks to research. And when you research, you own that research, right? Because it's your hard-earned money that you're putting to work. So it's very important. We buy great stocks, we do our research, and we get that experience. I talk about it all the time. So look, let's get going with this video because I have some great trades I want to show you, and I want to show you how you can sort the CTP dashboard by stock price. I get a lot of comments on my Facebook page where people want to find those great, inexpensive cover call stocks, and they just don't know how to find them. Well, the CTP dashboard is set up so you could actually sort the dashboard by price, and I'm going to show you that here right now. But before we get going, if you haven't been to my website, ctpdashboard.com, go there, download the new version of the CTP dashboard. You're going to see that I have set up over 1,200 research links from 100 of the best stocks trading right now. And I think if you've never seen the CTP dashboard, you're actually going to be blown away because I offer it up to you for free. I don't charge you nothing, and it's right here at my website. And I want to mention we're having this great conversation over on Facebook. We're posting up a lot of stuff, and a lot of people are asking questions, and I love it. I love the feedback. It is our off YouTube discussion. I want you to go to facebook.com, and I want you to like CTP dashboard. Now let me show you how the CTP dashboard sorts by price, and I think you're going to like it. Now real quick, so I can get to those trades. When you download the CTP dashboard, you're going to be presented with the dashboard. And the one thing I love about this is not a static product. This is actually something I created where I actually upload it with 100 of the best trading stocks right now on Wall Street. It changes up every single week, and I even let you know from week to week which ones are new to the dashboard. Now, a lot of people ask, hey, I only have about $5,000. How do I find those great stocks to trade covered call? Well, look, the dashboard has the ability to search by price. You don't have to work that hard. It's right here. All you do is open up the dashboard, and if you saved it like I tell you to save it in the how to use video, you'll see that you have admin rights. And when you have admin rights, you can click the drop down to sort A to Z. And when you sort A to Z, it lists the smallest to the largest stock prices. And that's where I have it color coded where it sticks out for you. And say, for example, you only have $5,000. Well, you have to own 100 shares. So if you buy a $50 stock, you're only going to be able to have 100 shares and write one covered call contract, which isn't a bad thing, right? If you write that 30-day covered call and collect $1, hey, look, that's money in the pocket. But say you want to have multiple shares. I know a lot of you cats think more shares, more money. Well, the only way you're going to do that with $5,000 is to find stocks that are less expensive. And every week the CTP dashboard changes. So you want to make sure you come back every week. Okay, We're going to start with my Alibaba trades from September. Yes, I know, I like to always claim that I have timely and relevant trades. But look, this video is about teaching you to trade like a pro. So we're going to talk about how in September, I was trading like a pro. And for a lot of you that remember when I bought Alibaba, back when it had fallen from 200 bucks down to about 175, 174, I stuck it in for a couple hundred shares and I was going to write some covered calls. But what I found is that Alibaba was not done falling and I found myself in a bad situation. I did a video called Managing a Really Bad Trade, and it was this Alibaba trade. Now, fast forward a couple months and here we are. Alibaba's now trading in at 160 bucks. It has rallied off of a bottom of the high 130s. And man, I was feeling like I was holding the bag. But I made a lot of trades since then that has reduced my cost basis on Alibaba, and I'm basically $6 away from being profitable. Look, if you're $6 down on Alibaba, you're not out of the game. This thing can move $6 in one day. So for me, it's about managing this trade, feeling comfortable in my skill to manage this trade, and that's what I did in September. September had some of my more exciting Alibaba trades, and I'm going to show you right here. Now, if you could see right here, you'll see that I bought Alibaba and I started trading it. I would write the out of the money covered call, looking to pick up about $3 or $4, and I was able to do that as Alibaba is falling. Now they're paying me premiums of $3 every single time, and Alibaba is falling. Let me show you a chart how that looked and what my mindset was, because this is where having that experience and confidence led me to collect these premiums while the stock was falling. So as you can see, Alibaba had rallied, and man, it starts to tail off. Now, I have played Alibaba in the past. So when Alibaba was around 180 about a half year ago, it had rallied all the way up to 210. When it fell off, I thought to myself, the next time this happens, I'm going to look to get into Alibaba. Well, it rallies, and now I'm thinking, this is my moment. I think it's going to peel off, and sure enough, that's what happened. And as Alibaba falls, I'm looking at a great entry point. Now, I'm looking at this chart here, and of course, at the time, I'm not thinking it's going to continue to fall. I'm thinking Alibaba's going to rebound, like right here. Well, that didn't happen. So as I buy these shares and I rate that $5 out of the money covered call and I get $3 for it, I'm thinking, hey, at 174, I can collect $8, pocket that money for a 30-day trade, and man, that's going to be a good trade. What happens is Alibaba tanks on the China trade wars, and now I'm going to use an exit strategy so I can alleviate my obligation, sort of reboot my strategy. And that's exactly what I did. As Alibaba really tails off here, that $3 option I got paid, yeah, in a couple days, it almost gets cut in half. Well, if you know me, what I like to do is I like to buy that option back and just sit back, maybe hope for a couple green days, or maybe I'll write another out of the money covered call, maybe $5 down, and then we look to do it again. It really depends where the stock has traveled since then. Well, in this case, Alibaba has traveled from 175 to 170 to 165 to 160. So we have these $5 increments for which it's falling. As I write my next covered call, I'm using that $5 fall as my next strike price. So let me explain that. When I buy the stock at 175 and it falls down to 170, I buy my option back for less. In this case, I've got $3. I bought it back for $1.80. I pocket the difference. I have my shares, and now I'm ready to write another covered call. Now the stock's trading at 170. I write a 175 covered call, and I get paid the $3. Now the stock falls again. It goes to 165. My $3 option falls back down to about $1.50. I buy it back. I collect the difference. Then it happens again. I mean, this is unbelievable. It falls from 165 down to 160. And now I'm sitting there holding a stock that has fallen tremendously. And now I have to make a decision. Am I going to keep playing this? And in the case of Alibaba, I told you I would. And I did. Now, as the markets tanked, I stayed patient. And the one thing that I did with Alibaba was when it really got low, I used the cash secured put. When Alibaba fell all the way down to 155 and then 145, I was able to write these weekly cash secured puts where I thought we were going to get a little bit of a bounce, so I would cherry pick that premium, and sure enough, that's what happened. Notice when I wrote the 155, we get a little bit of move up. And of course, when it starts to move higher, that premium that I got paid, and in this case, I think I got $3, the premium's going to start to shrink as the stock starts to go away from my strike price. price. Remember, cash secured put, I'm putting up the money to buy somebody's shares for a certain price that I pick. Well, that was $155. I got paid $3, and as the stock moves higher to $160 in this very short-term weekly trade, the time decay is working against the option. So that option I was able to buy back much cheaper. And now I've got my cash. Now I still have my shares, and I can sit back and focus on the next thing I'm going to do. And the next thing I ended up doing is Alibaba's fallen. I write another cash secure put at $145. We do the same thing. But the beautiful thing is Alibaba has found itself heading higher with the rest of the market. Now it's sitting at $160, and I'll tell you, with a cost basis of $166, if we can get a couple more green days, I'm really going to be happy that I had the patience, I had the skill to work this trade to reduce my cost basis using these various covered calls and cash secured puts to my advantage. I'm not sitting on my hands. That's what I did. I used the tools in my toolkit to lower my cost basis. And now, if we get a couple more green days, which I think we will, this is going to be a profitable trade. And heck, I might even do this again as it keeps going higher. I always have a plan. I try to execute my plan. And real quick, as you could see, I bought some shares. I went ahead and bought some more shares when the stock had fallen that I didn't mention. But look at all these covered calls and cash secure puts that I wrote, reducing my cost basis to 166x. So right now I'm in a losing position, but I feel really good that Alibaba has rebounded. And now I'm going to look to write my next covered call. And I think this is going to be a green trade. So we'll have to see how this trade works out. Let's go ahead and talk about my Adobe trade, which I know you're going to like. I know some of you newbies are like, hey, this guy's drinking way too much coffee. That's not the case. I get excited showing you my trades. We talk about them so you learn something. And I think with this trade, you are going to learn something. Because if you've been watching my videos, you know I like to use Adobe. I like to use Adobe for many different reasons. But for me, I feel comfortable owning Adobe. I actually want to own some shares of Adobe right now. I just had my shares taken away, and I'm going to explain them to you in this part of the video. But here's the thing. We want to make sure we want to own the stocks we're going to trade. You don't want to be looking at some list and then just willy-nilly buy it and not do your research. That is a golden rule that we do not want to break. So in the case of Adobe, I want to own Adobe. I've been watching Adobe and I've been playing it. I've been playing it for the volatility because as you could see, Adobe falls and they buy it back up. So how have I recently played Adobe? As Adobe is falling with the rest of the market, I'm keeping my eye on Adobe. And sure enough, on this day where Adobe falls 20 points, when it hit 220, I wrote a 30-day 220 at the money cash secured put where I put up the money and I'll buy somebody's shares at 220. I got paid $12 for that. And as you could see, my hunch was right. Adobe catches fire and it starts to head higher. And in fact, it heads to 250. Now, at that moment, I'm sitting there thinking Adobe's trading at 220. So I pick up 100 shares as well. I get Adobe at 219 and I decide when it gets a little bounce, I'd write a covered call. And sure enough, that's what I did. I wrote an out of the money, maybe $1 out of the money, 1 week covered call, and I got paid $4.30 for it. I'm thinking to myself, in this 5-day window, I pick up Adobe at 219. I'm going to have my shares taken away for $234.30. That is a heck of a trade. And if my hunch is right, remember that cash secure put I wrote at 220? Well, at this point in the trade, that cash secure put's trading for $4. So I could literally buy that $12 option back for $4, pocketing the $8 that I made. In this case, I didn't. As Adobe starts to really rally because Salesforce.com hits their number, I end up putting in a limit order to have that $12 cash secured put bought back $1.90. I left a little bit of money on the table with that one because that option went to zip. So with that said, I ended up having the 100 shares that I wrote that covered call on assigned. Somebody took those shares from me and they paid me $230. Now, that doesn't bother me. Adobe went to 250 and quite frankly, it's probably going to go higher. But for me, I have a plan. I execute the plan. And for me, I wanted $230 for my $219 shares. I made that money plus the $4 premium. I'm feeling good. We look to do it again. Now look, if you did not subscribe to my channel when I asked you to, I want you to do that because this is part 2 of a 3-part series. So I have another video coming where I'm going to talk about 3 trades that are of the more conservative nature. Part 1 and part 2 are playing that volatility. I get a lot of emails where people want to play the volatility, and that's what we just talked about. We played the market volatility to make some short-term profit. In the next video, part 3, we're going to really break it down with those great 30-day and 40-day covered calls. And I'll even show you a trade that Jerry did. He used a 6-month covered call and pocketed some great profit. If you like this video today, bang that like button. It lets me know you like what I'm doing. Ring the bell so you get the notification when part 3 of how to trade covered calls as a professional comes out. As always, I wish you all the best in trading. And until next time, I hope all your covered calls are profitable.